Welcome to the Dell Wamsley Radio Show. Listen and grow as Dell questions the status quo, encourages you to think differently, and empowers you to make a better life. Get ready as Dell challenges core beliefs, seeks the truth, and reveals the roadmap to the lifestyle you really want. And now your host, multi-millionaire, national award-winning investor, CEO and founder of Lifestyles Unlimited, Dell Wamsley.
Welcome to the Dell Wamsley Radio Show, where the hype ends and the help begins. I'm your host, Dell Wamsley, and as always, we're working on your financial freedom. My friends, I tell you, I wake up every day and I think to myself, wow, if I only knew what I know now, back when I was 30 years old making my first $1 million. It's just amazing. And I guess the point is that hindsight is 20/20. It really is. You can see the patterns so clearly when you look backwards. But when you're young and ferocious and aggressive and you don't have anything yet, you're still trying to make something for yourself, make something of yourself, trying to accumulate your stack of chips in this world, pull them over to your corner of the table and hold on to them, right? You're constantly battling with, is this the time? Is this the place? Should I make the decision? Should I jump on this? Is this going to be the one that makes me rich? Is this going to be the one that breaks me and sends me back to go? Like in Monopoly, go to jail. Do not collect your $200, right? It's interesting. So what brought all this little hysteria on? In the last week, I have come into this situation. I'm closing on one deal, one business deal, commercial piece of real estate. I made letters of intent. I got accepted 2 letters of intent on 2 more pieces of commercial real estate. And I'm making an offer on an apartment complex, which will happen today. And I've been looking at it for weeks now, running the numbers, analyzing the deal, analyzing the finances behind the deal, and so on and so forth. And what's interesting is that I see the world completely different in most cases than most of you would, definitely different than what brokers and real estate agents see it. And today I need to try to explain that to you. I want to share with you the dirty little secrets about the market that the brokers don't want you to know. Now, Dell, why would they not want us to know? Because they can't sell you anything. And they make a living by selling you stuff if you don't believe their lies. And you say, Dell, that's terrible to say the brokers lie. I own 12 real estate brokerage firms around the country. I'm not saying that any of my brokers lie. I'm saying that my brokers don't want you to know these little dirty little secrets because it makes it more difficult for them to get transactions to close. Now you say, well, why would you tell us if you own brokerage firms? Because I own brokerage firms to service people. We are buyer's brokerage firms. I created real estate brokerage firms to help people find deals, not to sell them a piece of real estate and have them overpay and get destroyed and ruin their financial position in life. And so I have a completely different set of reasons behind why I own and operate real estate brokerage firms. Yes, I want to sell you a piece of real estate. Yes, I'd love to make commissions. And yes, I'd love to have my companies make profits. Those are all positives, but not at the expense of telling you to do something that will hurt you. Because I've been in this business now on the radio and doing live entertainment and education for 33 years, September 1990. And I wouldn't be here. I bet you've all heard of some of these names. Dave Delgado, Robert Allen, Jeff McCone, Tommy Vu, the Mylans, Ron LeGrand, Carl Cheats, Robert Kiyosaki, even Donald Trump. All at one time or another had a self-help real estate training program. All those people have been around, plus many more, for the 33 years I've been here, and they're all gone. In fact, even a couple of the guys that came out of my organization tried to go and copy everything I did and duplicate it. They're having problems now. They're in big trouble. And it's because there's no integrity. You get out there in this wild, wild west world of real estate, there's very little integrity. Now, maybe when you know Susie, the local realtor, who's my friend, who's trying to sell me a personal residence, and I've known Susie and her family for 20 years. That's not what commercial real estate is. Commercial real estate is a group of highly motivated, shark salesmen that are out there pounding these deals out, making not a little bit of money. These guys are making hundreds and hundreds of thousands of dollars a year each. And they don't want to give that up. I mean, in some of the cases, some of these guys are making over $1 million a year selling commercial real estate. And they don't want to give that up. Let me repeat that for you one more time. They don't want to give that up. So when market conditions change, their approach and position has to be that, well, we're just going to bury our head in the sand and not admit that it changed until we absolutely have to. And the variable that creates the situation where they have to finally admit it is the financing. And today I'm going to explain to you some things about financing that is the dirty black secret of this whole world right now. And if I can get it out to you and you understand it, then you can be where I'm at right now, buying 4 properties within the last 2 weeks. Say, Dell, why are you buying so many? Because the secret is available. It's out there. You just have to know what it is and know how to use it. And that's what I'm going to try to share with you today. It's going to take the whole radio show to get it across to you. But if you understand the facts, now why do you need to understand the facts? Why can't I just tell you, Dell, tell me, and then I'm going to go out and use it? Because if you don't understand the facts behind the arguments that create the situations that allow for you to make a large amount of money in real estate right now compared to 6 months or a year ago, you won't be able to articulate it to the brokers. And the brokers are not going to let you just simply articulate it because it's not in their interest for the truth to get out. Now, we've got to go through that. You need to understand why that is, because you would think, well, there's no reason for people to be dishonest. I'm not saying they're dishonest. I'm saying they don't want this information to get out. And when I cover it with you and you understand it, you have to be able to articulate it because it will do you no good to go up there and just say it. You have to understand, if you ask a Democrat anything at all about what Biden is doing, they will tell you he's doing everything perfect, and they will lie about everything that's happened. That's their first defense on every Democrat. The first defense to every argument is it's a lie. It's Donald Trump did it. Fox News created it, and it's all a lie that Fox News created. That's the only thing they know how to say because they know everything they're saying is a lie. Everything they say is a lie. They know it. Now, by the way, I'm not a Republican. I'll go off on the Republicans too. But the bottom line is these guys are going to stick to their game unless you have the information necessary to push back against their position. So let's talk about an article with Marcus Milchap today. Marcus Milchap is one of the larger commercial brokerage firms. They want you to put your head in the sand and believe that everything's just hunky-dory and fine and that you should go ahead and buy real estate no matter what, even though they've got all kinds of problems. So what kind of problems are they articulating? Well, the problem they're articulating today's article was that the overall sales are down 41% from last year. There's 3 levels to that piece of information that we've got to cover today. And for you to just hear that go, that's the secret then. No, that's not the secret. That is a cover for the secret, right? That's what they want you to hear, not what you really need to hear. So let's dig in a little deeper. 41% reduction in sales. Then what does the guy come back and say? He says, well, I think this is misaligned. It misrepresents the real market because what's really happening out there is that the sales prices are so high that you can't really look at volume. You've got to look at transaction numbers. I'm sorry. So it was down like 60% or something like that. I don't even remember the exact number in volume. But he's saying if you go to the transaction numbers, it's only down 41%. Much better than the 60% if you look at the dollar volume. So there it is. They're trying to sell you it's not really as bad as what it really is. And what's really going on out there is that the transaction volume is down a lot. The next step is they go on down the line and then they produce this fact that even though the sales are down 40% in transaction volume and 60% in volume, dollar volume, even though that's the case, that the total for this year, 2023, is only back to the mean. What is the mean? That's the average between all the highs and all the lows. If you take an average everything, it's the mean. It's right in the middle. Everything is 50%, everything's above that, 50% everything's below that. That's the mean. And so over the last 100 years of tracking this stuff, we're right back to the mean. Now, this is an economic concept called referring back to the mean. Everything trends eventually back to the mean. That's what a mean is. 50% of stuff's up, 50% of stuff's down, and it sort of just hovers back and forth, back and forth, back and forth around that mean number. So why is that important? Well, it indicates we're back to the most normal marketplace that we should have. It's not really a dried up market right now. Like they're saying, they're trying to make this point. It's not really dried up. And yet, at the same time, what they're trying to say is that last year was the highest volume real estate sales year ever. And so 40% less is just back to normal. Say, well, why is that important? Well, first of all, because the sales that were being made were ridiculously overpriced. By taking the interest rates, and by the way, the interest rates are about 6 again. I think I looked at them yesterday. They're 5.65 to 5.45, depending on if you bought the interest rate down. Let's say you don't buy it down, it's 5.65, 6.9, something like that. A little under 6%. That is a low interest rate compared to the mean, right? So it's normal business again. It's what I grew up with in the real estate world. So what this is all saying to me is, Dell, this is looking more normal. I can start to use the information that I've learned over my 67 years of doing life to calculate what's going to actually happen right now. Because why? Because this market is more normal. When you had the market of the last 5 years, which was way out of whack, interest rates coming down radically fast from 5% to 4% to 3.5% to 3% to 2.5%. These interest rates were basically giving money away free, creating massive incentives to buy anything and everything, including overpaying for everything. So as we see people, hysterical people out there, getting access to lower and lower interest rates, their insanity is telling them to pay more and more and more because I want to use some of this free money. I'm going to go pay whatever I need to pay. So 5 guys come after a deal, and they bid each other up. And over the last 5 years, this has become the normal, that every deal out there gets bid up beyond what it actually should have sold for. I remember when they used to calculate on the rate of return the value of the property that the bank would probably appraise it for and put that out there as a listing. Hey, we want $5 million for this or $10 million for this or $20 million for this. They don't do that anymore, guys. For the last 10 years, at least last 5 years, they just go market. What does market mean? It means whatever the heck we get some stupid idiot to overpay. And they are overpaying massively. I mean, very massively. So what happens is the bank used to lend us 80% of the entire deal, giving us massive leverage, giving us incredible rates of return. But as the prices went up beyond what the banks could ever appraise the properties for, the bankers are no idiots. They're in this with brains and with tons and tons of technical expertise around them. They're going, you know what? We can't lend 80% on this. Let's figure out what the appraisal really is. And let's give them 80% of that number, which ends up being 70% of this sales price or 60% of this sales price. In fact, now some people are putting 50% down. That's telling you the bank is saying this property is 50% overpriced. And people are still buying them. Crazy, crazy people. We'll be right back with the Dell Wamsley Radio Show.
Teaching you with a roadmap to creating the lifestyle you really want. Keep listening. The Dell Wamsley Radio Show returns in moments.
I created these case studies 30 years ago for this reason. You're the accountant. You're the CPA. You're the engineer, the IT guy. Do you follow what I'm saying? You're that little quiet cubicle guy. And you don't see yourself as a rich millionaire. So I have to bring the cubicle people up here. And you go, honey, look, he's got the same shoes I have on, right? And he speaks in the same language that I speak in. And you've got to be able to see somebody you can relate to or relate with for this to work. Part of the reason I want you to speak to other people is because half of your, I'd say, challenge is that you don't believe you can be rich, is that you don't believe you can retire within 5 years. Until you can reconcile that in your mind, you won't be willing to take the steps necessary to get there.
Join us today. Check for in-person and online dates at lukstudy.com.
You're hearing the Dell Wamsley Radio Show. Want more life-changing knowledge? Access our podcast and listen on demand at lifestylesunlimited.com under the radio tab. Now your host, Dell Wamsley.
Welcome back to the Dell Wamsley Radio Show. Today we are unpacking the dirty little secrets that the brokerage world out there doesn't want you to know. Which brokerage world? The real estate commercial brokerage world and the financial banking brokerage world do not want you to understand what I'm trying to teach you right now. So as we left the last segment, we're talking about the fact that banks have stopped lending over the last 5 years, 10 years, the 80% they used to lend on every deal. What used to happen is you'd get an appraisal. How would they get an appraisal? They would make you come to the table with 2 years worth of past financials. They would take those 2 years and they would analyze them, putting more stress on the most current year. And if you didn't have those 2 years worth of financials, they wouldn't lend you any money. And then it got down to where they'd take just 1 year's worth of financials. And then the market started to change. As prices started to go up and people started to go in and renovate apartments, they started to sell the banks on the idea, well, I'm going in there and doing a total renovation on this deal. And because I'm doing a total renovation, I'm going to up the income on these properties and change the rents radically. And because of that, everything about this property is going to be different 6 months to a year from now. So they started selling the banks on lending them based on pro forma, that which will occur after I turn it around. Well, once the banks started falling for that, they went ahead and did it. They started lending on pro forma, but the deals started getting riskier. So the bank said, you know what, we'll lend you that, but we're only going to lend you 75%. We're only going to lend you 70%. And what they're saying is that the real appraisal for these properties, what they're truly worth, is not the price you're paying. The problem was the deals didn't make any sense. And so that's why banks are saying, we'll lend you 80% of half the price, or basically 50%. So you as a buyer have to draw a line in the sand and say, I'm willing to pay 20% too much, 30% too much, 40% too much, and you are paying that. Now, I know I'm out there right now looking at apartment complexes, making offers on apartment complexes, but what I won't let them do is take me beyond a certain limit. Well, as you take these deals, these offers to best and final, you get these guys going, okay, we've figured out this is the most we can get lent on the deal, which is a 40% down, 60% loan-to-value loan. And now the price that we're willing to pay is that number. And that's as far as we'll go. And then you go into best and final, and there's 3 guys, 4 guys, 5 guys there, and they're all starting to go, well, I'll go higher. I want this deal. Because if I don't get this deal, I don't get my fees. I don't get my commissions. I need a deal to happen for me to get rich. So I'm willing to overpay for these deals. And they have, and they did. I've been telling people that for 3 years. And now they're getting their lunch eaten. You can read any article out there. Wall Street just came out with one. 6 of the largest players of private equities in the country are in trouble. But I've been telling you this for 3 years, that it was coming. I saw it happening right before my eyes. Now I'm seeing it happen. So where we're at right now, though, is that the bank is still, and the brokers are still just saying, pull the sand over your eyes. Stick your head in the sand and don't worry about it. Just go ahead and pay too much. We're not in here to scoop up some fees and flip out of this thing and make a quick buck. Some people are, but that's not what we're doing. We're buying these things to retire. Long-term passive income for the rest of our lives. And so as we go in and we deal with these people, we have to get them to see that their financials don't make the property worth what they're trying to sell it for. They're giving us the financials, and the financials are saying, no, it's not worth this much. Realize this. We used to have to get an appraisal before the bank would lend the money. There's no appraisal anymore. They don't even appraise the property. The banks just estimate what they're willing to lend on the property. And that is 80% of some number, but not the sales price number. It's 60% of the sales price number is the maximum they'll lend now. And you have to understand what that really truly means. It means you're paying 30 or 40% too much. I mean, we could sit there with a calculator and we could figure out exactly what that is. I probably should have before the show. But it is a derivative. It is a true derivative of overpayment. If they were willing, and what the number has always been at normal market conditions is they lend 80%, right? We're back to normal market conditions. Remember, we have returned to the mean, right? We're back to the mean amount of real estate sales transactions occurring. The values have come down. They're reverting to the mean, to what, getting closer to what they're really worth. Sellers are being forced to sell at prices they don't want to sell at. In fact, one of the deals that I'm looking at right now, they had an offer for $50 million, and now the offers that they're looking for is in the 40 millions, low 40s, that they're looking for. They lost millions and millions and millions because they didn't sell at the peak of the market, right? But they still won't sell you the property for what it's really worth, because they expect that what was happening in the last 5 years is still happening. They believe that people are still willing to pay too much. And they have believed, or what they do believe, is that there is a pure shift in what real estate values are, that they are worth more. That's what they believe as sellers, because they believe the lie that sold them the property for too much, and now they want to sell the property to somebody else, which we call the greater fool theory. There'll always be somebody out there as dumb as I am or dumber than me to pay too much for this piece of real estate. Now, I will tell you this. There once was a guy that was out there that did real estate seminars. His name was Russ Whitney, and Russ Whitney ran his own real estate company into the ground, and then he took over for Robert Kiyosaki, and he controlled Rich Dad Enterprises, or whatever it was called, and he did all of Robert Kiyosaki's seminar stuff. He really just used his own material again and white labeled it Robert Kiyosaki. And then he lost all of his money. And again, because they would just do stuff that just didn't make sense, or was maybe even ethically inappropriate. I don't know how to say it. But I remember meeting with this guy, and I had him live on stage with me one time, and he goes, Dell, I made $250 million in 1 year. In 1 year. And I said, Russ, you should have joined my program. So why? You've never made $250 million. I said, no, I've never even come close to 250 in 1 year. I said, but what you could have learned was how to keep it. Because, see, I've still got the money I made over the last 30 years. And mine just keeps growing and compounding because I'm not making the stupid decisions that make me lose money. I know one guy used to be a student of mine. He was great. He did a great job. And then he went out on his own because he wanted to get crazy and follow his crazy mentor. And so he did. And now he's losing giant properties into foreclosure. Interesting. It's amazing how you can be so incredibly good and lose a property into foreclosure. Well, it's because Powell tried to put me out of business. Chairman Powell of the Fed put him out of business. No, he put himself out of business by doing bad things, dumb things. And that's the situation we're in right now, is that you guys out there can start getting good deals just like I'm starting to get good deals by not doing dumb things, by realizing that the numbers that they give you on the financials have to make sense and that the property has to appraise. And if you go out there and you look at a cap rate, which is a number that, unless you understand real estate, it's hard to understand. I'm going to try to make it easy for you. If I buy a property all cash and there's no leverage, the cap rate is the rate of return I make on the property. Now, properties used to sell for 10 cap rates. Then they went down to 8, then 7, then 6. And every time the cap rate went down, the values went up. And they got down to as low as 4%, which is insanity. That's what they used to pay for real estate in California, and they were paying that here in Houston and Dallas. And it's stupid. It's insane. It's dumb. Okay? Now cap rates are back up into the 5s. But the problem with that is that interest rates are into the 6s. And so why would you buy a piece of real estate where the income is less than the mortgage payment? That, my friends, is dumb as a rock. I hope you got some value out of today's show. And remember, it's not the money, it's the lifestyle. So don't take that risk.
The information and opinions you hear on the Dell Wamsley radio show are those of the host, Dell Wamsley, his guests, and his callers. The Dell Wamsley show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented on the Dell Wamsley show constitutes an endorsement, recommendation, offer, or solicitation to buy or sell any product or security.